Hello to everyone, my name is Gregor and welcome to our new video Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the dollar index, silver, crude oil, euro DAX, and also the S&P 500. So because of the geopolitical concerns and issues between Israel and Hamas, there is interest in metals. We also see energies trading higher, while dollar is somehow sideways, but also still in uptrend because it should act as a safe haven, especially if stocks would suddenly fall. Now, looking at dollar index, we are seeing that actually firstly here on a daily chart that last week prices were able to stabilize at these March levels and at this upper lower trend line. So it looks like that uptrend is still in play here after the US CPI data report last week. That was the cause for a bounce. So it looks like that now when we have also the geopolitical concerns, this dollar could look for another push to the upside. I think that 108 is a next potential area as long we are holding this 105.50 level. If we break this one, then I'm afraid that we will see a deeper correction. So in Elliott wave terms, I'm looking here for a final push higher into wave 5 of 5 to complete the higher degree uptrend that is in play since summer lows. Now looking also at silver. Now everyone is watching silver and metals in general these days, but keep in mind that on a higher degree time frame charts, we are still just trapped in the very big range. So in this range, we have to play carefully if we want to trade. So now when we stabilize at the lower side of the range, well, maybe there can be some opportunities to catch some uptrend here towards the upper side of the range. So it's still not, this metal is still not breaking out yet, but there is room for $24, maybe even 25 for potential resistance. So what I'm looking at here on a higher degree time frame scale is an ABCDE pattern. So it's a 5-wave pattern in this contracting range. So it's still ongoing correction. That's why I'm saying that you have to be careful when trading between these big ranges. But there is some room left to make money on the upside, because looking at the 4-hour time frame here, that was a very nice reversal after very sharp sell-off here at the end of September. So some major supports were broken, but now this 3 point of a support is not turning into resistance around 22.30. In fact, we are seeing prices recovering above that resistance. So I think that recovery is in progress and should most likely extend even higher after a pullback. So these 3 point levels here are around 22.30 can be the next potential support. So after this wave B, watch out for more upside into wave C of D towards the upper side of the very big range. Looking at the crude oil, also this market is in a recovery mode, okay, but in the near future maybe there will be some volatility in both sides, because we will see how market will respond. Biden will visit Israel today, so we'll see if we will get any news from that region. If there will be any kind of a positive news, you know, that then market could come to the downside here. It can stop at the resistance. Also, Russia and Venezuela, they said that they will be looking and cooperate to trying to stabilize the market and maybe even increase some export. So we will see if maybe this will try to stabilize the prices. Now in Elliott wave terms, I think that this correction could take a little bit longer here. So there's still room for $100 per barrel. It's the 61.8% in that area. So I think that could all at some point could see more upside. But if you will see closely here, the substructure of this recovery, well, notice that the first leg, wave A, is finished because of a very sharp and significant reversal here back at the start of October. And now we are recovering, okay, because of these geopolitical issues. So if we get any kind of a good positive news, okay, then maybe crude oil could potentially come to the downside. Keep in mind that everyone wants to, a lot of institutions wants crude oil to to see more weakness, because it will help other central banks and countries to bring down the inflation. Okay, so I'm so sure that everyone is watching crude oil here, and if we can break, let's say 84.30, then I think that lower prices, lower supports can be still retested around $77 per barrel. So that's my major support for a potential bounce. Not yet here at 80. I think that 77 is much more appropriate level based on the Elliott wave structure. Looking at the euro dollar, it's also in, as you know, in a temporary downtrend. I'm actually tracking a very big flat correction here. It could come to an end very soon, 104, 105, that's the support. But notice that we could stay here weak because this recent recovery was in three waves, and actually it stopped at the upper side of this downward channel. So I still think that more weakness can be seen here. Even wave 4 can become some kind of a triangle here. Okay, but around 104, that's the potential support for the euro, which, by the way, I still think it can stabilize by the end of the year. Looking at German DAX, well, it's, as you know, situation in Europe is much worse, economically speaking, compared to the US. So it's not a surprise to see maybe stocks in the US doing much better compared to German DAX. But German DAX still has a very big level here, the important one, the horizontal level around 14,700. That's also the swing levels. If you go back to October 2021, so more than a year back, it was a very nice support here. Then we broke lower. It was a very strong resistance in March and June of 2022 and also December of this year. And then again, we broke higher, and now it became the first support in March of this year. And now maybe it will be another support for the end of the year here around this level. So it's also the 38.2% plus. We could be looking for a completion of an ABC drop in that area. Looking at the 4-hour time frame, well, another final leg here into this big support level here, as I said, could still be in the cards, because notice that this recent rise here unfolded in three waves, and in Elliott wave terms, that's seen as a correction. Even if you look at the whole structure as a potential from basic technical perspective, you are seeing broken bear flag. So I think that more weakness here could be seen in the near future. But as I said, stocks in the US are looking much better. Here, looking at this daily trend line support on the S&P 500, it held very well. Seasonality is still bullish, as you know, for October. We had even some puts that were in extremes back at the start of the month. Normally, when these are the extremes, if fear is a little bit overcrowded, we know that market can do the opposite. So I think that here stocks in the US are positioned much better compared to the euro. So if you're looking for some kind of a risk on trades, keep an eye on this market. As long as we are holding these lows from October earlier this month, I think that market could resume higher, because after all, we have three waves down from that highs down towards the lower side of this parallel channel. So I think that more upside here could be seen. And if suddenly, let's say, we stay here or even break higher by the end of the week, and that maybe we go close towards this trend line resistance, then I think that really the doors will open for much higher prices next week. Traders, hope you enjoyed this video. Talk to you next time. Bye.